name's David Buckland and welcome to this week's Video Insight. This is the fourth in a series of presentations or interviews I'm having with the Montgomery Small Companies team. And today I'm delighted to be accompanied by Dominic. For context, the Montgomery Small Companies Fund, over its 23 months to the end of August 2021, has put on an extraordinary 63% and the benchmark, the ASX All Ordinaries Accumulation, Small Ordinaries Accumulation Index, I should say, has put on less than 29%. So we've got a north of 63 and a sub 29. So in total, it's outperformed the benchmark by 34.75% after all expenses. That's an annualized 14.8%. In the past series, what we've done is we spent the first one talking to Gary Rollo on telecommunications, and we focused on Megaport and Macquarie Telco. In the second one, we spoke to Dom, and we spoke on travel, and there we focused on corporate travel and Alliance Aviation. And in the most recent series of interviews, we spoke again with Gary, and we focused on decarbonisation. And in that interview, we focused on Pilbara Minerals and Areas Resources. Today, Dom is going to focus on retail. And the two stocks Dom's going to focus on are City Chic, CCX is the ASX code, and Lovisa, LOV is the ASX code. And for context, those two stocks combined aggregate to an exposure of around about 5 percentage points of the Montgomery Small Companies Fund. Dom, over to you, mate.
Thanks, Bucko. So both City Chic and Lovisa are high-growth Australian specialty retailers with significant global expansion strategies. Neither have been COVID winners, so their prospects are looking increasingly better as key markets like the US and the UK open back up. Another common feature is their laser-like focus on their respective categories. We think this aspect really underpins their success. Retailing is a difficult business, and many of the larger global groups have suffered because they've expanded into lots of categories in an attempt to become everything to everyone. But that comes at a cost. Less focus often means lesser customer experience, and they become generic and often find themselves in a race to the bottom on price. And this has created an opportunity for specialist companies like City Chic and Lovisa to step up and take market share. So I'll start with Lovisa, stock code's LOV. Now this has got a $2 billion market cap. It's come out of the very well-regarded Brett Blundy stable of companies. Lovisa is a vertically integrated specialty retailer, totally focused on selling fashion jewelry, largely to a younger demographic, and mainly from its global store network. Their growth strategy has been driven by an aggressive global store rollout. The company now has around 550 stores worldwide. 2/3 of these sit outside Australia and New Zealand. So the business heavily relies on foot traffic and events like weddings and parties. So the pandemic has had significant impact on network sales as well as the pace of the rollout over the near term. But the pandemic has also presented opportunities for Lovisa. Last November, the company bought around 100 European stores from a German group called Beeline, which was looking to get out of bricks and mortar retailing. They paid just €60 for around 100 stores, which should take probably 5 years to secure. And this deal also came with around €10 million in cash. It's really quite incredible. Now, if we turn to Lovisa's FY21 result, it really was impressive. Earnings beat market expectations by around 8%, and the outlook was really encouraging. The first 8 weeks of trading in FY22 have seen stores that are open deliver almost 40% like-for-like sales growth. And management spoke to a strong rebound as countries come out of lockdown, driving a shift back towards more fashionable jewelry worn at functions and events. So Lovisa looks really well placed as a reopening story, particularly in the US and Europe. When we look further out, the store footprint could grow from its current base of around 500 into the thousands. Now, if we consider City Chic, stock code is CCX. This is a $1.5 billion market cap company, also a vertically integrated specialty retailer, but solely focused on plus-size women's apparel. This is a market estimated to be worth almost US $200 billion globally and remains underserved, with most trade going through generalists like department stores. And the shift towards online consumption, as well as the pandemic, have put many of these generalist competitors under significant financial pressure. So market share is absolutely up for grabs for disruptors like City Chic. To capitalize on this opportunity, City Chic has expanded globally, first into the US and then the UK, and most recently into Europe. It's done this both organically and through a number of strategic acquisitions, also taking advantage of the pandemic with some distressed asset sales. Now, importantly, this global growth strategy involves an e-commerce model, which scales very well and is much less capital intensive than a traditional physical store rollout. Online sales now account for almost 3/4 of total sales, while just under half the company's sales are generated overseas, but growing very rapidly. Now, despite being largely an online player, City Chic wasn't necessarily a COVID winner, since the pandemic caused supply chain issues and it drove a shift away from its higher margin fashion dresses towards more casual wear as people stayed at home. Now, the FY21 result was pre-announced in July with an Avabi deal, so there weren't too many surprises there. What was surprising was the outlook commentary, which was much better than expected. The offshore acquisitions have recovered strongly as restrictions have eased, and there's also been a recent shift back towards fashion clothing as people head back out. The company also announced a number of really exciting new partnerships with global marketplaces, which are going to support the continued high growth rates for the business over the medium term. Another fact to consider is the strong balance sheet. City Chic has $50 million surplus cash earmarked for further acquisition opportunities, and that's not in the numbers, so that's upside. So we remain convicted in the City Chic story. Management's execution has been on point so far, and they've many growth levers, so the foundation for strong growth over the next 5 to 10 years looks really solid. Thanks, Bucko.
So there you have it, ladies and gentlemen. A quick focus on 2 retail stocks owned by the Montgomery Small Companies Fund. Dominic, Rose, thanks very much for your time. Ladies and gentlemen, I hope you're getting something out of this series of interviews. And if you have any questions, don't hesitate to call my colleagues or myself, David Buckland, on 02 8046 5000. Thank you.